All right, it is January 6th, 2025. It's crazy. We're in 2025. And every week, what we're going to do here, every couple weeks, is we're going to start putting together a document for our edges. And this week, we're putting together chart plays and technical analysis. So, what we've got is common chart plays on here. And the main thing that I want everybody to know is technical analysis is used for the market makers to take your money. What that means is it's going to work a lot of the times, but sometimes they're going to trap you and trap you big and try to take all the money that you've made from all the other ones, right? So um, the ones that I really want to focus on is sometimes on the ascending triangle type edges. Patterns. You can buy off of trend lines, and but there's not a lot of people that just load in off those trend lines. But there are people that load in on new highs, right? So when it breaks out, so like when the neckline breaks on the cup and handle, when the neckline breaks on the head and shoulders, or the ascending triangle or descending triangle, that's the breaks is where people buy. Um, so we just need to be aware of that. Now, the most important thing to do is to identify VP zones. I call them zone one, two, and three, and this will help us know if buying a breakout is worth the risk. My favorite chart patterns are ascending triangle, inverted head and shoulders, cup and handle. Um, yeah, so failed breakout in the little U. We're gonna have to. You guys remind me to put these in a little bit later because these are what the little U and the breakout is. Is it's actually you're playing within patterns and you're using them. So like the little U is not a pattern, right? Quote unquote, not its own pattern, but it is the handle in the cup, and it is the third kind of dip down on a ascending triangle, right? So if we go back to this ascending triangle up here and we look at it, where's the little U? One, two, well, right there's the little U, right? Right on my little cursor. And so the little U happens on pennants, it happens on flags, it happens on cup and ham, it happens on all kinds of things. So I want to focus on that by itself as we create the rules. Oh yeah. Oh whoops. Head and shoulders. Oh whoops. That should be inverted head and shoulders. Yeah. Thank you. Yeah. Oh, I forgot the woodpecker. Yeah, we got to put the woodpecker in here, right? Triangle, inverted head and shoulders, cup and handle, and the woodpecker. Uh, CTTM sheet, right, for the woodpecker pattern. Okay. Identify chart patterns. Anything else that we need to put in there? Okay. So the next thing is what do we do after we identify chart patterns? I would say after you've identified the chart patterns, and if you guys disagree, this is for open discussion. What I usually do is I usually go in and like let me find the VPs. Find the VP zones. That should be the next thing that you do. It's like, oh, okay, let's play this ascending triangle. Let's figure out where the VPs are. Let's figure out where the range is. So find the VP zones, determine risk, reward. Okay. Uh, what should be next, guys? Oh yeah, maybe I should make it volume profile. Sorry, volume profile. Okay, so volume profile. Here, I'm gonna put VP right here. just in case I put that somewhere throughout the document again. Okay, so now that we've found volume profile, so here let's just let's actually find a chart and say what would be the next steps. All right, so I was playing Fubo earlier. So if I pull up Fubo and I'm like, let me check out this chart. What chart pattern do we have here, guys? Anybody tell me? On Fubo. It's kind of like an ascending triangle, right? You broke a little bit higher here, and you're getting your 1, 2. So if you wanted to say this one was a higher, you could call this a cup and handle, right? So there's your cup. So what I would do is I would come into this higher zone between 450 and 5, and I would need to identify the levels. So let me do that real quick. You've got your main VP levels 475 to 490. Okay, so you don't want to be in this below 475. If it does, it'll come down to 410. It'll hit 450 first and probably flip over to 410. Okay, so I'm identifying VP zones. Okay, then after I identify VP zones, and I'm like, all right, well, if I buy at 5, okay, so then I could buy, so I could play the chart accordingly after that if the VP zones allow. Okay, so make plan to play the chart pattern accordingly if VP if volume profile says the risk reward is worth it. Okay. I am Sharky. I'm recording this. What time frames? Yeah. So here's that's a good thing to put up here. Identify a chart pattern. Chart patterns can be found from 1-minute charts to really weekly is what I would say. To weekly charts. You can go further, but that's what I would focus on. So any type in here. The thing to remember about these, always remember the longer time frames usually hold, or what should I play out? Is that the right word? Better than shorter time frames. Okay. So like right here, right now on Fubo, you are literally coming back to where you need to hold, right? So you guys see how if we switch this to a 1-minute chart, you see how it's got like 1 hit, 2 hit? But if we switch this to like a 15-minute chart, it doesn't look like that. It's just flagging out, right? What chart patterns do you need to play, or what time frame do you need to play? Well, it really doesn't matter as long as you understand. Looking at what I'm showing you here on E-Trade, where is the bulk of VP? So you see this right here? You see this big chunk, right? Like this is your main VP, and you see how it's kind of making this upside down L, right? I don't like these; they're top heavy. That doesn't mean it can't go. It can easily go. It's just got to hold it. So what is that level that's going to break? So So we need to put something in here like within the plan. Well, I don't know. Is that a given? I don't know if it's a given. Like you always need to have, hey, this is that level that's going to break, and I need to be out. And so for me, that level on this is 470, 475. Like we can't be under all these people. What's most likely going to happen if this breaks down is you're going to come back down to 450. You'll hit 450. You'll bounce back up to 475, 480, and then you'll start the downtrend. And you're going to come down here to 410. Well, at least 420, right? Um, so the main thing that we need to understand here is whatever chart pattern you're playing, figure out when it breaks, decide if the risk reward is worth it. All right, well, how do we do that? Okay, so if I can get in this at 480, 485, risk 10 cents to try to take it back to 5 and then possibly higher, yeah, I think that's worth it. Right? And so if you were doing that on the first one, the first hit, bam, sell portion, now you could actually put in a break even stop and or a stop at entry, right? And now you're safe. You've got a free trade on Fubu. That's how we would play this. So now I need to put that into words. So you guys help me do that. So if volume says play is worth it, always find the chart is broken level and use that as risk. Is that clear? Yeah, there's a lot. We'll post it, and I'm recording as well. Um. Oh, scroll down. Okay, my bad. You guys can't see that. Thank you. Right. Is that better? Okay. Okay. I think this is a good start. All right. So, okay, understood. Um. Now, rules. All right. Let's make some rules here. Rules. One. Never swap chart patterns. E.g. How do I say it? So here's what I'm thinking, guys. So sometimes I'll be like, this looks like it may be a double bottom. Oh, it's cracked the lower right shoulder. Maybe it can hold. Okay, it did held a little bit. So if it does pull back, it's actually going to turn into an inverted head and shoulders. And that's okay to do because you're using it on that same line. But you don't want to be swapping and making excuses of, hey, well, you know, it was a double bottom here. Now I'm going to play this as a double bottom a little bit lower. Oh, it barely held on. Maybe now it can be an inverted head. You know what I mean? Like you're always negotiating with yourself to stay in the trade. So how do we allow both? How do we allow that we can technically pull from a double bottom to a inverted head and shoulders, but not negotiate with ourselves? Does that make sense? I'm trying to think here. Yeah, if it exceeds risk, it's busted. Yeah, that's yeah, that's a good idea. So here Jay, here's my thing with that. So like I do my risk, like I'm rarely full size, right? I know most people that don't have, 7 8 figure accounts don't necessarily like you have to have that hard line. I think instead of saying risk, I think what we need to say is it's that same level if the chart is broken, because that's what your risk is supposed to be off of, right? And so never swap chart patterns to allow yourself to play a lower VP level for longs. Never swap chart patterns to allow yourself to play a lower VP level that you've already decided is the, I'm going to say always find the chart is broken level and use that as risk. I call this over under level. Over under. As you've already decided, is the over under level. Does that sound good? Does that look good? Yeah. So, if I am playing a double bottom off of this particular area and then it cracks a little bit lower and then it comes right back, I'm like, oh, that's perfect. Maybe it's the inverted head and shoulders now, and I'm going to use that low as the stop out. I think that's good. Um, so for you guys that use Bookmap, it's fun to use, and that's what got me to learn VP. So if you're new, I would use it for a couple months just to try it out, and but you don't need it. You can everything's seen in VP. Okay, so never stop. Okay, so example given: if playing a double bottom and right shoulder breaks lower and quickly reclaims, we can play a possible inverted head and shoulders. Wait, however, we cannot lower our over under level and try to buy off of that new level. Does that make sense? Is this too confusing? Is it too wordy? Okay, let me read it again. E.g., if playing a double bottom and right shoulder breaks lower and quickly reclaims, we can play a possible, man, it keeps swapping that, inverted head and shoulders. However, we cannot lower our over under level and try to buy off of that new level. So gnarly, all that Bookmap does is you can change the color coordinations and stuff like that. It's showing where big orders are going off. Like the bigger the bubble, right? The larger the size, and so it's basically VP and you can see the order book. So it's showing you the tape. That's it. It's just showing you the tape. Okay, I think this is good so far. All right. So rule number one, check. Now rule number two. What are some other rules, guys? You guys help me out here. What are some other rules? Again, it's just dealing with chart patterns. So I think always be aware of the market maker traps. These are failed break. Why do I capitalize these things? Failed breakouts. I capitalize them because this is how I talk. Like I just put FBO. Failed breakouts or failed breakdowns. Failed breakdowns. Okay. Always be aware of. I think we should definitely do that. Now, with this one, when playing a breakout, is breakout one or two words? Breakout. Breakout. There we go. When playing a breakout, I guess I should put when buying on a breakout. When buying on a breakout. Always keep stops tight, tighter. This means you should hold, you should use the closest myopic zone from VP as risk. Okay, is that too confusing? Like, I know what it means, but I know what I'm talking about. So here, I'll give you an example. Let's look at Fubo. So if I'm playing this as a breakout, let's say we want to buy it over $5 and we're going to play a breakout. Where should I put my stop according to that rule? Like, who do I have to keep happy? This Fubu is a great example of it. So do you see how we put the descending triangle in, right? Boom. Now it's cracking. So what people are putting in for the recording, they're putting in 5, 490, 465, 475. Yeah, this is the beautiful art of trading, right? That's what makes it so hard. So what I would tell you is if I'm buying a breakout, it would be very different than me trying to buy a cup and handle type pull, right? So like, remember, I'm like, well, if it pulls to 480, I'll grab it. I'll use the risk of 475. Well, at that point, what I'm doing here, it's a very different trade. I'm actually using these people on a cup and handle for absorption, right? But now that we're breaking out, I don't want to be below any of these people. Like the worst case scenario would be like, one of the lows up here showing the VP. So I would have probably put it at around 480, 490. You know what I mean? I would have put it somewhere in there. Because if this breaks out, what's supposed to happen? We're supposed to go. Now, maybe it does a little retest and it comes in and it hits 495. But if you start making the people here unhappy, it's going down, right? Because what's going to happen is you're going to get a flood of buyers buying the breakouts. You're going to get these people taking profits, the people like me taking profits. I bought at 501, I'm selling at 511, right? Oh yeah, I've made my dime. Okay, and then we're scalping this breakout, and then as it rolls over, it's got to have enough push up and away to allow for proper rebuying in this area. Otherwise, all these people are going to get stopped out as well as the people that chased, and that's going to create your waterfall of stop outs. Does that make sense? So that's what I mean by playing it high and tight. Like keep it like high and tight. If you're absorbing this like on a different pattern, great. But on a breakout, you got to keep it real tight. Does this make sense? I hope it makes sense. Okay. Okay. What are some other rules? Okay, here. When absorbing break buys into two or more buys. Make your last buy at risk area. All right, no, I shouldn't put that. Have at least one buy at your risk area. It doesn't have to be your last one because that one kind of if it holds. Anyway, I don't want to get into all of that, but have at least one. So that you want to get as close to your risk area as possible. Okay. So when absorbing buy breaks. Okay. On absorption, create the absorption zone. And after your first buy, begin selling, taking profits at the, what do I call that, the next, at the next VP level. I'm trying to word this better. Create the absorption zone and after. So here I'm going to say it, and then you guys can help me. When I start absorbing, and it always depends on what you're doing. It could be a 1 minute, it could be a monthly, it could be, like with AMD, I started absorbing at 150, right? Um, and it's like I'm absorbing down to 125 next. I'm absorbing down to 130. Well, once I get filled on a buy, I start taking profits at next resistance levels so that I can buy back as it comes down. So, for example, on AMD, I was buying here, right? And I was selling. I was selling up here, and I was like, yeah, all right, let's go. Making some money, right? Well, but I still had room to add as it came down to, I think 135 was my next level, 125. Like, all right, great. Guess what? I was selling some up into this next level, right? Right here and right here. It's like, all right, great. But then it came down even lower, and I was like, oh, let's load the boat. Well, guess what I'm going to do now? I'm going to sell some at this 135. So it's like I want to sell at. Oh yeah, I forgot. Sorry. I want to sell at those levels. So create the absorption zone. After your first buy, begin selling, taking profits at the closest VP levels. Here, I want to show you guys something on Fubo. So if you can't see my chart, pull up Fubo right now. So you remember what we talked about? Like, if this breaks out, right? We bought at 5. Like, I'm not in this, but this is how you would play it. All right, we got it. I don't want this going below like 45, 490 down. Like, it's got to go. If it doesn't go, well, what's happening? Do you guys see this amount of volume coming in? Literally the highest volume of the day besides like open candle, right? So we a lot of people are buying right now and selling, right? So we have to push up and away to allow for a proper retest. So it's like, all right, bam, here we go. So if I was playing this, I would begin to take profits right now. So here we need to put in another rule, and I'll finish 3. When buying a breakout, we want quick profits in order to lower cost basis and stay safe. Right? Okay, so bam, we've gotten that push. I think 20 cents, 25 cents is enough to allow for a proper retest. Will it hold? Nobody knows, right? And so what I would do here is I would say, all right, where are we on the overall chart? Blah 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 blah. Do I want to risk at entry? Do I want to risk lower? Right? You could kind of be a little bit more flexible with your stop. So I need to put that in here. Okay. Um, Lower cost basis and stay safe. Once you have lowered cost basis, decide if you want your trail stop at entry or break even overall. Do not let the trade go red on you. Control B. That's exactly what happened, Paul. Yeah, 100%. Yep. So what Paul's talking about is he said, hey, did we just see the market makers wash everybody out just to rip it? Yeah, 100%. There's your descending triangle. And what did I tell you at the very beginning? Market makers use technical analysis to screw you over, right? So everybody that was up here wanting to push through 5 was like, we're holding, and they're scared, and then they're like, crap, I got stopped out. And then the market makers are like, just kidding, we go. This is why this is one of my favorite patterns. It's not a technical pattern, but this is what I play all the time, right? Once this level breaks and then we get back over this VP level, the odds of it going back and breaking highs extremely high, like probably 90%. So yeah, 100%. It's exactly what we saw. Bam. And how many of you guys have ever been this person? Right? How many of us have ever been this guy? It's like, oh wait, what did I sell it at? Oh, I sold it at 475. What was the low there? Oh, that was me. I'm 475. Look at me. They stopped me out. Bottom ticket, right? We all do it. Everybody does it. It's part of trading. But knowing is the first part of fixing the trading system so you can make money. Okay, boom. Yeah, it's the exact same thing that happened on Nvidia that I was telling you guys about loading up on Nvidia. It's time to go. It's time to load. Okay, when absorbing, break buys into 2 or more, have at least 1 buy risk area. Okay, create the absorption zones. Taking profits at the closest VP levels. All right, once you take profits on your buys, you have the option to buy back everything you sold and your planned ads. If this is going to be the art. If the absorption range is hit and bounced, this is the art of it. So if the absorption rate is hit and price bounces, see the word I want to put in here, it's not enough. If it bounces far enough away, you need to take away your ads. And bounces back above the next level's VP support, remove the remaining buys. Okay, so once you've taken profits and buys, you have the option to buy back on everything you have. So absorption rate is hit and price bounce back to the next level's VP support, remove the remaining buys. Okay. Have I forgotten anything, guys? So this is where we need to do it, right? This is where we're like, all right, this is our, here, let me save this document. And then we will go looking. Can anybody think of anything else that I need to add? Mm. Oh, I do. Okay. Um, when um, here when adding to winners, always make that trade its own trade and have its own risk profile. So what I mean by that is like on Fubo, if for whatever reason I'm like, all right, Fubo's flagging out here on the 30 minute. Now it looks like it wants to go get 550, and I play like an ascending triangle up here, right? That needs to be its own trade, even though I'm still holding some Fubo from this five break or whatever, right? Okay, so let's go find. Just go find something. So here on Fubo, right? We broke out. Where's that level? Where's that level we don't want to get under? We're right at it. Like this is the do or die. You crack here, what have you done? You've trapped all these people. So it's like this is the Bulls' last line in the sand if they want to hold this. If they do not hold this here, it's coming back to VWAP, most likely, right? Unless the market makers want to do another lower low, stop everybody out, and then rip it to a higher high. And that's when you're creating broadening formations, and that's just what I don't play. I don't play broadening formations. So I'd be like, screw you, market makers. I'm not playing your game anymore. Uh, all right, so here, let me see if I can find. Let's check out love. Yeah, love on the daily. Yeah, if you guys have questions, yeah. You if you wanted to just look at this part of love right here and say, hey, one something like that. If it does this, absolutely, right? So if you got a pullback in love that pulled to like 24, 23.75, and you're like, look, I want to play this as the little U. Sure, yeah, it's your third hit. It's always your third hit, right? It's here. Let me bold capitalize is your third hit. Control underline bold italicize on the ascending triangle. Okay. Costco's making ascending triangle in 5 minutes. Let's check that out. Let's see. Let me see your chart here. So you're looking right here. Yeah, I wouldn't call that an ascending triangle, but it's definitely a flag. I do like this Costco chart. Remember, I said pick it up around 900. Bam. The low 902. I literally missed this trade by like 15, 20 cents. All right, just give me a sec. I'm gonna run through some charts that are squeezing on like I don't know. Let's go 15 minutes. A lot of times you can find some good patterns in there. That one's not very good. Yeah, no, this one's not too bad. Yeah, look at there. Okay, boom. Yeah, maybe VRT. Oh yeah, this one I like. This is the one. I bet. Yeah. Okay. Okay, so I think this is going to be a good example. Everybody can see that, right? See how clear that is? So you guys tell me, if this upper level breaks, what should happen? Oh, you know what? We need to put in the rules. All right. Always update your if then statements to follow the pattern. And that means if something, if a chart breaks up, then you should go to the next zone. Okay, I think that's needs to be a part of the market makers. Um, Here we go. If not, it is a possible fail breakout. Okay. Yeah, so here's what should happen. If we break out, we're going to go to your next main VP level. Well, where's that going to be? It's usually your next high level, right? If we were a little bit lower, like if we were breaking out of this level, well, then it would be coming up to that level, right? And then after that, it would be there. So if this breaks, it's like, all right, we should be pushing up and towards 58.45. So if we wanted to play this right here, right now, if we wanted to buy it off the lower trend line, a good VP level is about 58. So I think we could do that. And so, all right, we're gonna buy just to play it as an example. We're not trying to make a lot of money here. I'm gonna buy 100 shares, right? So here we're gonna buy 100 shares, and what we're gonna do here is we're gonna say, look, we're at basically value area low of this zone, right? All right, I'm gonna give it. Hold on, let me put it up on my E Trade as well. So I can. Sometimes the daily VP is a little bit better on E Trade. Yeah, so 57.90 is your stop. So what is the low here? 57.98, right? What we're doing by giving it 90, if it wants to like just do the little wick out and stop everybody out with this low, we're still going to keep it. But we don't want to be below. You see a little bit better here on this group of people, right? Everybody see this long VP level, right? These are the people that we want to stay in. If we break down these VP levels right here, where are we going to go? Well, we're going to come down to this VP level, which is at VWAP, which is at 57.50. Okay. So, and you can do this long and short. So right now we can say, all right, great, I'm long. If it breaks this level and rolls over, then I'm going to stop out of my long and I'm going to play it short. Because according to the chart pattern, according to technical analysis, we're going to come down, we're going to hit this low, 57.90. We're going to bounce back up, retest 58, stop out short, pull all the way back down to VWAP. Sometimes that doesn't work, like on Fubo, because that's exactly what they were doing, right? They stopped you out right here. And if we short, trap the short, stop out the longs, rip. And that's what creates this pattern. Is literally what I just talked about. Literally what I just said. All right, well, shoot, I'm going to stop out, flip short. Oh, they trapped us. Boom, we go. Right? So, again, nothing from a technical analysis perspective, nothing works all the time. Okay. Now, the other thing that I'd like to do is that's my dog. I apologize. For tomorrow, we're going to use this sheet and we're going to play something. Okay. Yeah, yeah. Hood looks great too. You know, the problem with Hood though, again, is higher high, right? So if you notice, you got a failed breakout here. So what's that mean? It means you got to come down here and break the lows of here, which you've done. So failed breakout, failed breakdown, back to right where you are. Right. So what we want to do here is if there's there's not a wrong play on this. Um, the way that I would do it is I would be selling at up here at this level up here to lower my cost basis. You know, take out about 15 cents. And then if it breaks and pushes up here, it's like, all right, here we go, we're over. And then what that would do is that would confirm the breakout, and I'd be willing to buy it back if it did a retest. So again, what am I doing? All I'm doing is buying support, selling resistance, right? Well, that resistance becomes support when? Well, when it breaks. Okay, well, if it comes down here and then it breaks back down, I'm going to keep this stop up here, the add back, tighter than I would this one. I don't want to buy it here and then let it come all the way down to here. It's a different trade. Oh, is it three? Oh, okay. Yeah, sorry. I'm doing a little session, Nate. I can jump off though whenever you get back. Just let me know. Okay. So here, document is saved. Let me share this. Okay, I think I'm going to stop this recording. Um, and we can do a review on this a little bit later, see how this plays out. The thing to notice about this that we didn't talk about is the QQQ and the SPY has been going down this entire time, right? Which makes it harder to buy things that are going up, right? It's just harder. I guarantee if the SPY and the QQQ were going up, this would have already broken by now. So anyway, I just wanted to put this on as an example trade. We've done it. Um, if it does break up, I would be taking profits. I would be rebuying back on a retest of this VP zone. I would take profits again at your highs, right? And repeat, rinse and repeat. Okay. Okay, so this is something that we're going to be using tomorrow, and this is what I want to be doing throughout the year is just creating these new sheets. And we will stop this recording.